QuickBooks Online 2025, entering a bill payment form, lowering the accounts payable. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 project file we set up in a prior presentation, opening the major financial statement reports as we do every time. The report's located on the left-hand side within the standard reports favorites section. Right-clicking on the balance sheet to open a link in a new tab. Right-click in the profit and loss, otherwise known as the income statement, open a link in a new tab. Let's go to that middle tab and let's close up the hamburger and do a range change up top, going from 010125 tab, 013125 tab. Run it so it can refresh. Tabbing to the right, closing the hamburger and change that range again. 010125 tab, 013125 tab. Run it so it is also refreshed. We'll go back to the middle tab now. And now we want to enter a transaction that's going to be paying off a bill, meaning we're going to be decreasing the liability account of accounts payable. Now note we haven't spent a lot of time entering bills in this section. We're going to enter more bills in the following section. I want to do a quick recap on how this money got into the accounts payable and the standard flow on when and when you might not be using the accounts payable, because we need to remember accounts payable is an accrual account and will complicate our accounting system. Therefore, as a bookkeeper, the question is, when do we want to be dealing with accounts payable? What kind of clients do we want to be pulling in? So I'm going to be going to our flowchart. This is the desktop flowchart. We're using it for QuickBooks Online purposes, just to look at the flow of forms, which is basically the same for any kind of tax software that we will be using. Remembering the easiest system is usually to be on a cash-based system, and beyond that, to just record your books with the use of the bank feeds. Wait till the increases and decreases, in other words, clear the bank using the bank transactions and memos to record those transactions. However, as we have seen in the customer side of things, we can't always do that, and it's out of our control oftentimes when we can't do that. In other words, if I just get gig work and the money comes from like YouTube into my bank, I could just use the bank feeds and record it as a deposit in that case. But if I'm at a cash register, it's likely I'm going to have multiple forms of payments, want to do then an internal control, and therefore have to use a create sales receipt, which will complicate the system, even though it's not on a cash-based, even though it's not actually an accrual-based system there, but it will complicate it enough so I possibly can't simply use the bank feeds to record transactions. And if I'm in the type of industry where I have to do the work first and invoice, a type of industry where I usually cannot claim the convention, I can't change that convention typically when I'm working in the industry of bookkeeping so that they pay me before I do the work, right? Usually I do the work and then invoice, which means even small businesses are forced to do an accrual thing, recording accounts receivable, tracking the accounts receivable for work done in the past so they can try to collect on it. It's not quite the same for the payable side of things. So when we think about, in other words, cash basis versus accrual basis, how the bank feeds fit in, you kind of want to differentiate cash or accrual basis on the purchasing or cash outflow side of things and the cash inflow, the customer cycle side of things. So on the cash outflow side of things, usually small businesses will be on a cash-based system, and therefore as a bookkeeper, this is where we're most likely able to automate things as efficiently as we can with the use of the bank feeds. How do we do that? We try to tell people stop using just cash, because then we have to enter actual receipts. We want to have the audit trail, particularly if we're doing this for taxes, because in the event of an audit, we want to be able to show the electronic transfers, and cash doesn't show that. Cash kind of hides the transactions, right? That's why the government doesn't like cash in particular, because they want to be able to kind of audit transactions, right? So if we get a legitimate deduction, obviously we want to be able to track it and prove that we have a legitimate deduction. Electronic transfers are better to do that. And we'd like to get off the checkbook even, because if they're on the checkbook, what will happen is we're going to have to enter the checks as we write the checks and not wait till they clear the bank, because there's going to be a substantial difference between when the check was written and when it clears the bank. So in other words, if you have a client or yourself use a checkbook a lot, you may still be on a cash-based system for the money going out, but it's still going to complicate the system, forcing you to not simply use the bank feeds to record transactions due to the fact that the checks have this long outstanding component or lifespan when you write the check. And the question often will come up as to, well, I wrote the check, did it clear? If someone says they didn't pay, they didn't get paid, then our question is, well, I wrote the check, did it clear? And we have to be able to enter the check when we wrote it in order to determine that, not wait till it clears the bank. But if we can get ourselves or our clients to do electronic transfers, then we're usually going to automate the transactions as much as possible, paying them out of the bank account once they become due. The electronic transfers will come through the bank account as that happens, and the turnaround time will be fairly small, 1 to 3 days, so that we can basically rely on the bank to record the transactions in that case. That's the easiest thing to do. But some businesses, when we get larger, will want to enter the bills as a bill, increasing the accounts payable. Why would we want to do that? Well, possibly we want to increase our time value of money. We want to increase our cash flow efficiency. So in other words, if I pay a small bill like a $75 bill, I don't care if I pay it today or if it's due 15 days from today. But if the bill was $7,500 and or I had thousands of them, it starts to become significant from a time value of money standpoint as inflation kicks in, and from the standpoint of just simply cash flow, holding on to the money longer so that we have more money at any given time, just simply to holding on to it. That means that most small businesses most likely will not be using accounts payable. You're not going to be entering things as bills a lot, except possibly when you're dealing with inventory purchases as part of your purchasing process, because you can automate the system and record the electronic transfers automatically. So that's typically what you're going to want to try to do. Now, if they don't have cash and they can't make an electronic transfer out of the checking account, they might use the credit card, but it's the same thing. We can automate the credit card. So that means that you might not be dealing with accounts payable for small businesses unless you have bills. Larger businesses have a whole department to deal with accounts payable to try to pay off things as late as possible. Next thing to just realize is that when you get a bill, remember the terminology differences we have here. In normal language, if the utility company gives me a bill, then we call that a bill, even if it's a paper bill or an email. We could call it an invoice. They invoiced me. The telephone company invoiced me. However, when I enter that information into QuickBooks, I'm using a bill form. You want to differentiate that in your mind. We got the bill from the client. When I enter it into the system, the question is, am I going to enter it as a check type form or expense form, simply paying the bill as it becomes due, possibly using the expense form to pay it off with the use of the electronic transfer or the bank feeds? Or am I going to enter it into my system as a bill form? The bill form is different than the bill, right? The bill is the email. The bill is the piece of paper. The bill form is the data input. So I might not enter the paper bill as a bill form. If I do enter the paper bill as a bill form, it's going to be increasing the accounts payable. All right, so that's going to be the idea. If I'm going to go over here then, so that we have the accounts payable in our system right here. Let's go to the first tab and we can track the accounts payable with a subledger. So this is similar to the accounts receivable if you have to deal with accounts payable. That being, if I go into it, it's going to give me what we would call a general ledger type of report or transaction detail report for QuickBooks. But that's not going to give me enough information that what we want is to break it out by who we owe the money to and when is the stuff due. So we need a subsidiary report. Now, typically we do the subsidiary reports or we track it internally. So if I go to the first tab, for example, and we go down to the expenses area, which is going to be like the vendor section, we can track our bill multiple different ways. Now, remember, if you paid your expenses off as they become due with electronic transactions and bank feeds, you will usually be using expense forms, and you might not spend a lot of time in here sorting out the vendors. Why? Because you've already paid them. Unless they have a problem, unless they're calling you and say, I didn't get my money, then we'll have to look it up. But usually we won't have to do much in here. But if you have to track accounts payable, then you could have whole departments in here trying to sort out when we can pay the bills as late as possible, so that we get our maximum time value of money while still not angering our vendors, because we want to keep a good relationship with them. So it's a balancing act, like everything. So we're going to go to if I could go to the expense areas, and we can scroll down here and say, let's look at the bills. So we have our bills. Here's the bill that we entered before. The only bill that we have entered is when we pulled in the beginning balances. We entered this amount as the beginning balance from the prior system, which QuickBooks used and entered as a bill. So if I go into it, so here is the bill. Now notice down here, the bill is going to other miscellaneous expenses. That's not where this particular bill was actually paid for. It's most likely we bought inventory with it, because this is our vendor that we buy our guitars from. Why is it going to other miscellaneous expense? Because when we put it on the books in our practice problem, it was from the prior accounting system. So notice what is happening here. The accounts payable is on the books, and we have the bill in the system, so that we can now do the normal process of paying the bill, which is great. However, if I want to know what we actually bought with the bill, I'd have to go to the prior accounting system when we entered the bill, because the idea here is that we have the cutoff date, which was 12/31, December 31st of 2024. We start the new system January 2025. Anything prior to 2025, you're going to have to go to the prior accounting system. Now, the stuff that was on the balance sheet in accounts payable has to be on the books as of 12/31/24, but the thing that got it on the books is prior to the cutoff date. So notice how this works here. We got the bill on the books. We got the amount on the books. We have it on the books so that I can easily then pay the bill, but I don't have all the detail of what was on the original bill that we entered into the system, because I just pulled in enough information to get the detail, everything working going forward. To get the more detail, you'd have to go on the prior accounting system. Once we actually enter this, then everything will be in the new system going forward, and we should be good to go. So I'm going to close this out. If I go to the bill section, this sorts the bills just individually. So we might go here more likely than the other one. We have for review, we have the unpaid bills. That's where we're going to sort them. Obviously, we only have one here. If we had multiple unpaid bills, we might go through and sort them here, sort them most likely by due date, so that I can pay them as late as possible. Or we can go to the vendors tab. And once again, we have the bills. So here's the open bills, filtering the open bills. There's Epiphone. Let's go into Epiphone. And then we have our open bill in here as well. We can schedule a payment. Now, remember the schedule payment thing that's a more detailed kind of system if you're going to be paying it through QuickBooks. So remember, there's the way you can basically pay things off are you can try to pay things by check. You can pay things off by credit card or by bank feeds, right? So the bank feeds could connect to the credit card, and the bank feeds could connect to your bank. You could then connect your bank to the who you're paying, like the Verizon, your telephone, and have it pay basically automatically. Notice that connection between the bank and Verizon is done through your bank, right? You're paying them electronically. It has nothing really to do with QuickBooks if you're doing it that way. Although once it clears the bank, then the bank feed will pull in the transaction to the bank feed as money going out to Verizon. However, if you have a QuickBooks checking account, like you actually sign up for a checking account, buy into it, then you might have a little bit more flexibility to like track your accounts payable and schedule a payment, because now you have the bank account's not only connected with the bank feeds, but it's an Intuit bank account. And that's when you might basically be able to schedule like a payment and whatnot. So if that becomes important to you, then you might want to do that. Again, most small businesses don't need that functionality with it. I don't think that's usually the reason for small businesses to get it. Although if you're tracking accounts payable, that might be something to look at. I think the Intuit Bank system would be more likely useful to small businesses when they're trying to collect on their invoices. And right, because then you can possibly connect the invoice payment a little bit more easily, so QuickBooks will be able to recognize the electronic payment that went not simply to any bank, but to the Intuit Bank, so that Intuit can more easily kind of record the transaction that way. So in any case, that's the schedule of payment. Now we can also go into the plus button up top, and once we enter a bill, the next thing we have is the pay bill form. So let's go into the pay bill form. So under the pay bill form, we have the similar layout. So all three of these places we went have a similar kind of area, right? The expenses area, the bills area, the vendors area, and now we just entered the pay bill form. Noting that the pay bill form might actually have multiple bills, as we'll see in future presentations. In this case, we only have one that we're paying off. So although we're looking at a form that's going to record a transaction, if we wanted to pay off multiple bills, then it's actually going to create multiple pay bill forms from this one screen, right? And you can imagine, like in the old days when we had to write checks, we would have to check. This form was great because then we can check off all of the ones that we want to pay, and we had to actually get the checks that were pre-designed checks and put them properly into the printer so that we can print them all basically at the same time. These days, oftentimes you're going to do some kind of electronic transfer, so you might not have to deal with the whole check type of situation. All right, so we're going to say it's a pay bill form. That means, by the way, what does it mean when it's a pay bill form? What's the account that should first come to mind? Accounts payable is going down, right? Now, you might say, what's the first account that comes to most people's mind? Cash is going down. That's true. Cash is going down, but QuickBooks is going to make a special type of check form that's going to decrease the accounts payable. So the thing that this is always going to do is decrease the accounts payable. That's what we want to come to mind. Now, you might also say, well, isn't it just a check form because it's decreasing the checking account? It is. It's just a check form or an expense form, which is just a check form with no check number. But QuickBooks gives it its own designation, check form, that's specifically a pay bill form, because that form in and of itself gives you the information of the other side of the transaction, which will always be accounts payable. Whereas if QuickBooks just called it a check form or an expense form, then you don't know if it paid off accounts payable, and you don't know, if it was an expense or a check form, right? There's pros and cons to that. Maybe I'll talk more about that in a second. But the point is, we're going to be paying it out of the checking account. You could pay it out of the credit card account as well if you wanted to, which would increase the liability instead of decreasing the checking account. Let's put it in there as of 01/28/25. What's invalid date? What do you mean, man? 01/27/25. What's your problem? I was just being glitchy. I used the little calendar thing and clicked on it, and then it was okay with it. All right, so then we're going to say this is going to be, I'm going to start the check numbers at 1011. I have to type it in there manually because I messed up the check numbers before, which means I probably messed up your check numbers. Now, you might not be doing actual checks in practice. So the three ways this might happen is that you might be doing electronic transfers or some other kind of payment, and then you're going to enter these maybe with no check number on it, or you might just put transfer on it or something like that. Or you might be entering the checks, which we used to always do before, which means you might have pre-printed checks you have to put in the actual printer. A lot of people aren't doing that as much anymore, but if that was the case, you'd have to line up, make sure the beginning check number lines up, which it should automatically, and then enter the checks. Or you're physically writing the checks in a checkbook, in which case, once again, the check number that you're physically writing should line up to here. If you're printing the checks, you can say print later and then print them all at one time if you wanted to do it that way. We can filter the items if we needed to, last 360 days by month, payee, and location, usually, or overdue status. That's most likely the most common thing we're going to filter by, because we're usually going to be sorting by the due date. Notice you could sort by the fields with the little arrow. Usually it's going to sort by due date. All right, we're just going to check this one off. We can cancel it. We can schedule a payment, save and close, save, and print. So what's this going to do when we save it? It's going to be decreasing the accounts payable, and the other side is going to be decreasing the checking account. And it's also going to impact the subsidiary account for accounts payable by vendor, in this case, Epiphone. Let's go ahead and save and close it and then check it out. Let's go to the balance sheet to check it out first. Run it to refresh it, because we only deal with fresh stuff here, fresh produce, except when my neighbor steals it. And then I have to deal with old stuff unless I want to go to the store. I wish they'd stop doing that. I like fresh stuff, but I can't. It's always anyway, let's go into the checking account. All right, so if we scroll down, we're going to say, why is it doing that jittery thing? Stop. Oh my goodness, it's giving me a headache. Okay, that's weird that it does that. All right, so here it is. See how it's a bill payment form? It still says it's a check form, but it gives us the added information. Now notice, I just want to point out there's pros and cons to this, and this is one of the major differences between QuickBooks and some other of their competitors, like a Xero, for example, which I think Xero has a little less detail in the form names. So let me just give you the quick rundown of kind of like the pros and cons in my mind. Because notice all of these forms that are decreasing the checking account, you could just generically call them a check. A check for data input, a check form, is a form that's going to decrease the checking account. And you could have used the same form as they do in the desktop version to do an electronic transfer. It just won't have a check number then. And to do a check, which will have a check number field. And to do all other kinds of checks that are paying off other things, like paying the payroll check, paying the bill payment, it's still a check. Paying sales tax, it's still a check. But QuickBooks Online decides to differentiate those things, making slightly different forms for each of them, having a specific check form that has a check number, having the same form but with no check number called an expense form, having a separate check form designed just to decrease the accounts payable called the pay bill check form, having a different form name for the form that pays the payroll check form versus the sales tax. So that's could be useful, because then by looking at just that transaction type, I know what's happening. I know that the other side's going to accounts payable without looking at anything else. So that's cool, but it also makes the transaction types, there's a lot of different transaction types. Like if they were all under the same category of check, then, and I wanted to filter for all of the things that decrease the checking account, I can filter by just checks. And now I have to filter by like 10 different forms, because they use a different form for everything. And when I look at, like, I can easily find the other side because it's in the split column. If there's only 2 accounts affected, if there's more than 2, it would be somewhere else. So I'm not totally convinced that all of that detail is good or bad. Other software like a Xero doesn't have quite as much detail, and sometimes that's easier to filter by. In other words, if I filter this, I usually filter by type, and that would be using the filtering options up top. Let's switch it to modern mode and check out the filters in modern mode. So here's the filters. So if I add a filter, then we have our filters here, and I can add a filter, and then usually we do it by transaction type. And I'm saying it's going to be equal to, and then now I have all these different kinds of checks, right? So if I filter by check, then that only gives me the checks. It doesn't give me the bill payment forms and whatnot. So I have to be able to break all those out. All right, so that's the pros and cons of that. Let's go back, save and exit, exit without saving. And then I'm going to say the other side. Where did the other side go? It went into accounts payable, which is now down to 0. Let's go into that one, and boom, that goes down. If I go into the form, it takes us back to the form. Notice that if I go into the form and I had checked off multiple checks, then it would take me into only the one check that I clicked off on, right? Because I could have had multiple bills that we paid off, but when I go back into it, it's only going to show me the one bill at a time per transaction. So let's close this out and go back up and go back. And so nothing happened to the income statement. If I go to the income statement, nothing's happening because we would have already recorded the expense when we entered the bill, which happened in the prior accounting system before the cutoff date. Let's go into the internal reports now. If I go inside, we're going to be, just to remind you, we're in the expenses tab, close on the ham boogie. We could search it by expenses now. And now we have the bill form, which now gives me the balance is now at 0. So it's been paid off. We could have the filtering options here if we wanted to filter it, but I'm not going to get into that now. Let's go into the bill payment form. So on the bill payment form, it didn't do it. Where did it go? Bill payment form. There it is. So here's our bill payment form. Boom. And then if I go into my bills tab up top, similarly, I've got the unpaid bills. There are none. Why? Because they've been paid. So on the paid side, it's now over here in the paid section. We can show the payments this way if we so choose. Boom. There's the payment. And then if I go into the vendors, we no longer have any open bills here. If I go into, let's unfilter that. If I go into Epiphone and check it out on the Epiphone, we've got the bill, which has now been paid. So let's check out the bill, edit or view the bill, por favor, and it says paid. Boom, and it's linked out here. There's the link to the payment. Boom, closing that out. That's beautiful. So this is what QuickBooks does quite well, linking these items out. And then here's the check, or here's the bill payment check. So again, they have a different type bill payment check. All right, so that's going to be the general idea. I like to give the general idea because generals are good at like tactics and stuff. So the generals usually have a good idea. They have good ideas. So that's the general idea. So let's go down. Let's go into the reports on the left-hand side and take a look at our trial balance. The trusty trial balance. The trusty TB, not tuberculosis. Trial, this is a good TB. Let's go from 010125 tab 013125, run it to refresh it. And let's take a look at the balance sheet. This is where we stand at this point in time. If you want to check your numbers to our numbers, if your numbers tie out to our numbers, then you're correct. And if they don't, then you're wrong, unless I messed up, which happens sometimes. It's possible, but usually I'm right. And then let's go to the trial balance. This is just the balance sheet on top of the income statement. So if your numbers tie out to these, great. If not, try increasing the date range to encompass the current date. If your numbers change, drill down on it to the source document, possibly changing the source document to before January 31st, 2025. See if that fixes it. If not, we will do transaction detail reports at the end of the first month of data input. Noting that the trial balance is the balance sheet on top of the income statement, balance sheet of assets down to here, ending at the furniture and fixture, the accumulated depreciation being a contra asset, liabilities starting with accounts payable, which is now at 0, ending at the loan payable, and then the equity accounts going down to owner's equity, equivalent to, in essence, retained earnings, then the income statement, the revenue accounts minus the expense accounts, including cost of goods sold, and then all of those other expenses that we entered. The two income accounts minus the expense accounts would be equivalent then to what's on the income statement, the $13,285, which is also on the balance sheet under the equity section. That amount on the income statement would go to 0 if we changed the date range to 2026. It would be moved from net income to owner's equity on the balance sheet if we change the date to 2026. And on the trial balance, all these accounts would be squished together to net income and added to owner's equity if we change the date to 2026. I'll let you do that on your own, see if I'm right. And if I'm not, I am right. I'm not even going to do it because I know I'm right. I got nothing to prove. I don't need to prove nothing. But check it out to see, because you might need to prove it to yourself. But I know what I'm talking about. I know it.